Welcome to Mad Money. Welcome to Cramerica. Other people make friends. I'm just trying to make a little money. My job, okay? Not just to teach and entertain, but I am going to give you a lesson tonight about what not to do when these bombs start flying. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. Nobody honestly expected that Iran would do nothing to retaliate against the United States, right? The arsenal of theocracy seems to have more missiles than people, certainly more than we seem to have ourselves. But the whole point of this exercise was to take out Iran's nuclear program, and they clearly don't have nukes anymore. Or maybe they would have used them by now. Today, the market breathed a bullish sigh of relief when Iran simply fired ordinary missiles at our military bases in the region. At least so far, there haven't been any casualties. President Trump said Iran gave them advanced knowledge of the missile attack, which seems like a bit of a waste of their arsenal. He thanked them in social media for the heads up. We blew up their nuclear program, and that's all they can come up with? Those conventional missiles fired at U.S. soldiers in Qatar were not enough to stop this market. This is a market that wants to go higher. Dow advancing 375 points. S&P gaining 0.96%. NASDAQ climbed 0.94%. Bye. And look, clearly the stock market's got it right, because the price of oil only closed down more than $6 or 8% today. If it looked like Iran was going to do something serious to retaliate, oil would have stayed up. But either they can't or they won't. And oil is saying that this spike of the last few weeks, it is over. Perhaps Iran launched this pro-forma missile attack because they can't afford to close the Straits of Hormuz, as that would cut off their own ability to fund whatever is left of their anemic economy. It would be the height of folly for them to take out their principal method of export. Yet we heard they were going to do that all weekend. It's never happened. Either way, the Iranian response didn't matter. Oil's back to where it was before the war started. And that was the signal to buy stocks, which is exactly what people did. Sure, maybe Iran's holding back something. I know. But if this is all they have, then Iran has a real poor hand. And this region's chaos stays in the region. Without oil going higher, the only thing that might impact our economy, the market tends to move on. That's it. At the end of the day, chaos in the Middle East is business as usual for Wall Street. So what happens now? Do we focus on our own response to Iran's lame attack? No, we go back to where we were thinking before the airstrike on Saturday night. Before we get to what happens next, can we please go back to what happened that afternoon for a little lesson here about not panicking? Let's go over that moment, because as is so often the case with anything military that puts our soldiers in harm's way for the first time in a new land, it was a time of terror for many investors, maybe for you. And it's a lesson teachable moment that I want to use before I tell you what business as usual now looks like. When the U.S. dropped its bunker busters on Fordo and the other targets, I was at a fabulous wedding in Napa, California. Congratulations to Madison and Tommy DeCipio. The officiant told us to silence our phones, which means, by the way, turn them off. But just a few minutes after the bride correctly said, "I do," we knew both the launch and the result. A second away from the procession's exit, people began to ask me about what it would mean for Monday. Oh, they were all so scared. I got up to speed. Instead of answering, I turned the tables and said, well, what do you think? Okay, get this. The range, down 500 Dow points to down 5% for the entire market. Nobody said it was going to go up. I said, if that's the case, you got to buy. Why? People asked. I came back and said, well, what would you sell and why? No one had an answer. And mind you, these are people who own stocks. I asked them if they liked their stocks. They said yes. So I said, why not buy more? They said there could be retaliation. I was unconvinced. Iran's been firing missiles at Israel for a while now, and it hasn't made much of an impact. See, this kind of weak thrust and sensible parry about stocks, it went on all night. Everyone had a desire to sell or thought the others would sell, so therefore they should sell. But they didn't know whether to join the sellers in the end, but it seemed like the right thing to do. I came back and said, what do your companies have to do with the selling in the S&P 500 futures that could monopolize things? That will be what goes down. Why not hold fast? Why not buy? It's just too counterintuitive for most people to process. Was it counterintuitive for you? Let's think about this. Here's what's missing. The PE, that's right, the price to earnings multiple. It doesn't go down when there's something like a missile strike because individual stocks simply can't be related to an extraneous event like this. If the U.S. hadn't slammed Iran's big nuclear facilities, then maybe someday Iran would have dropped a nuke on Israel. That's an existential threat that could impact everything. But if you take out the Iranian nuclear program, then Iran's just another country that's at the mercy of our nuclear-armed, well, let's say our machine. As a result, there can not be much that they can do. And when we realized that they couldn't against our great defense, well, the stock market roared. Wiping out their nuclear facilities was bullish for our stocks, plain and simple. So we don't ignore Iran, but because our initial attack went well, we kind of went back to our regularly scheduled programming. Now, what does that mean? We go back to earnings. We go back to secular theses. We go back, of course, to the Fed. Today, two key members of the Federal Reserve actually talked about how rate cuts could be in our future, possibly as soon as next month if the tariffs don't bump things up too much. No, it wasn't from Jay Powell, who continues to be ridiculed by the president for declining to cut rates. But they were important enough to set the tone in the absence of negative news from the Middle East. Rate cuts? Market goes higher. Don't you dare outthink that. It was the chief reason why we went higher today after we found out that the Iranian missiles attack didn't produce any fatalities. Lower oil, lower rates. What's not to like? Then we had news that could be traded on. Let's see. Meta's going on a hiring spree for top talent. Bullish. Microsoft's growing more lean. Bullish. Tesla gets the robotaxi off the ground with a flat fee of $420. Really bullish. BNY, the old Bank of New York, trying to buy Northern Trust. Kind of deal that would never even be considered under the previous administration because of a concentration in the custodial bank industry. Extremely bullish. Netflix gets its usual push. Amazingly bullish. Palantir does nothing. Super bullish. And on and on. Here's the bottom line. I know that all sounds glib, but it's accurate. It's what happens, and you need to know that. I don't think we could have had such a bullish day without those Fed officials floating the idea of imminent rate cuts. But it's entirely possible that our government destroyed Iran's nuclear program. That means this war may be nearing its end, and a jump in oil prices may have been taken off the table. If anything, oil could really plummet here as Russia and Iran flood the world with much needed cash. That's what the market's saying. And that's what I'm saying, too. Frank in Virginia. Frank.
Jimmy, too. Welcome back.
Whoa, man. Good to hear your voice. What's going on?
Nothing much, man. Thank you so much. Big booyah from Northern Virginia. Thank you so much for all you do for us Investing Club members and, of course, the general CNBC viewer.
All right. Remember, Wednesday, 12 o'clock, Jeff Marks and I. Could be fireworks, could be sparks, or no, there could be education and teaching. Go ahead.
Oh, man, can't wait. Well, Jim, my question today is about a red-hot stock, very popular, one that you keep raising your price target on. But I want to know, what's it going to take for you to get behind this stock like you do with the CoreWeave, per se? My stock is Palantir.
All right, but the CoreWeave, we got the 4 times there. That was a good one. All right, now Palantir, at 50, I said it's going to 100. At 100, I said it's going to 200. Can I wait till it gets to 200 before I have to raise my price target? But I will, believe me. Hey, and thank you for the kind words, and don't forget that Wednesday meeting. Let's go to John in New York. John!
Hi, Jim. This is John from New York. Love your show.
Thank you.
My question today was about the Circle Internet Group. Should I hold or sell?
Okay, Circle is a short squeeze. Tomorrow morning, you will sell 50% of your position, 5-0. You will let the rest run. You will do that tomorrow for me, and I thank you. Hey, how about we go to Ken in Florida, please? Ken.
Booyah, Professor Cramer. I have followed you for decades and made a lot of money listening to your words of wisdom.
Excellent. Thank you.
The stock that I'm calling about has a PE of over 73%, but it only has an annual growth rate of about 25%, which I know falls a little bit below your 2-to-1 ratio. But it hit an all-time high today of about $320, and only pays a de minimis amount of dividends. Mm-hmm. But it accounts for about 50% of my account, actively traded IRA, and about 16% of my personal account. And my basis is only about $50. So I only sell in my IRA account, where I have been trying to pare down.
And what stock would that be?
It's HEICO, HEI.
Oh, man, that is an aerospace defense stock. That is such a good company. Look, I mean, it is reckless for me to say don't sell any with that concentration that you have. So you will take some off tomorrow just because you're going to be a good soldier. But I got to tell you, I like the stock. Is that a contradictory thing what I just said? No, because discipline always trumps conviction. I have conviction that the stock will go up, but discipline says you got to do some selling. Look, the market is telling us that this conflict in the Middle East could actually be nearing an end, that the president did take out those nuclear facilities. And if that is the case, we can go back to focusing on what's bullish out there. Oh, man, buddy, tonight, we need to get a handle on the situation in the Middle East more than we've done so far. What does it mean for the price of oil and gas? We're going to go to Rusty Brazil of RBN Energy to get some answers. Then, Darden Restaurants reported a real strong quarter, setting the stock higher last week. But after giving up some of those gains today, could the stock still have much more room to run? I'm going to give you my take. And then you stump me with this little thing called Arlo Technologies. I got to turn in my homework to you. Why? Because I work for you. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.